Hey guys, there has been a roller coaster of information on Bitcoin with some promising developments and some news that's still unfolding. But one thing is becoming increasingly clear. The Bitcoin reserve, a strategic reserve, is closer than ever to becoming a reality. This is happening because there is now an official order on cryptocurrencies. Let's dive into what this means. With this order, there is now a foundation for a digital asset reserve, which is not limited to Bitcoin alone. This has stirred up a lot of speculation and rumors about whether other cryptocurrencies might also be included in this strategic reserve. While there's some uncertainty surrounding this, it opens up a fascinating conversation about the broader scope of digital assets. The timing of this is incredible. This isn't a far-off initiative projected for 10 years down the road. It's happening now, and it's a major deal. During the Bitcoin conference last June, there were rumors about something like this, and now it's unfolding rapidly. It also emphasizes how this move could reduce the cost of goods and services across the board, positioning the United States as a manufacturing powerhouse and a global leader in innovation. The implications of this are massive, not just for Bitcoin or the crypto market, but for the country's economic future. The connection between artificial intelligence and cryptocurrency is becoming increasingly clear, and the idea of the US being the global hub for both is incredibly exciting. This year is shaping up to be one of the most transformative yet, especially in the United States. If the promises being made are followed through, 2025 could be groundbreaking, with significant strides in both AI and crypto adoption. There was an announcement to change the Senate Banking Subcommittee on Digital Assets. This could redefine how the US integrates digital assets into its economy. And that's not all. We're seeing an overwhelming wave of positive changes for the crypto world, with one new initiative after another. Just look at the SEC. They've launched a dedicated crypto task force to establish a fresh framework for Bitcoin. And here's another major development. A rule that once prohibited banks from offering Bitcoin custody services has now been reversed. Honestly, I didn't even realize this restriction was still in place, but with its removal, banks can now officially provide custody for Bitcoin. These advancements signal a strong pro-crypto stance from US regulators and lawmakers. The momentum is undeniable, and it feels like the pieces are finally falling into place to make this year one for the history books in the world of digital assets. Banks now have the ability to custody Bitcoin, which is a major development, though it raises an important question for true crypto enthusiasts. Why would someone who believes in the principles of Bitcoin and self-custody choose to let a bank hold their assets? For those who value simplicity, this could make sense, especially for the general public who might find managing private keys daunting. However, for those who understand the essence of Bitcoin, entrusting banks with your crypto might seem counterintuitive. Now imagine this scenario. What if the FDIC was instructed to ensure Bitcoin and crypto holdings in banks? That's one of the main reasons people feel secure keeping money in banks. FDIC insurance ensures deposits up to a certain amount per person and for couples. If such a rule were extended to cryptocurrencies, it could revolutionize how people view and use digital assets. Suddenly, holding Bitcoin in a bank could become appealing, especially for those wary of self-custody or concerned about the risks of losing private keys. At the same time, this change aligns with the broader wave of pro-crypto initiatives. The SEC, for example, is evolving under new leadership. There was an announcement of the launch of a dedicated crypto task force. Their mission? To develop a modern regulatory framework tailored specifically for cryptocurrencies, rather than relying on outdated securities laws created nearly a century ago. All of this signals a broader effort to bring more people into the world of digital assets by making it safer, more accessible, and better regulated. It's an exciting time for crypto, and these developments could mark the beginning of a new era for mainstream adoption. There's a new task force aimed at updating outdated laws that no longer align with the realities of today's digital economy. This shift is a welcome and positive development, signaling that the SEC is adapting to the modern era of cryptocurrencies. Meanwhile, the financial world is embracing Bitcoin like never before. CEOs of major banks who once dismissed or opposed crypto are now praising it. They've come to realize that they must either adapt to this new reality or risk irrelevance. The sentiment that Bitcoin is not a threat to the US dollar is gaining traction as it's increasingly seen as a store of value rather than a competing currency. It remains a phenomenal hedge against inflation, a robust medium of exchange, and a vital part of the world's most decentralized and secure network. On the blockchain itself, activity is thriving. Whale transactions have surged throughout the week, and while inflows of 100K Bitcoin have begun to slow, the market's overall trajectory remains bullish. The market cap has climbed to over $800 billion, reflecting the growing confidence and adoption of Bitcoin. As Bitcoin continues to develop as an asset, the ways investors approach it are also evolving. To navigate Bitcoin investing in 2025 and beyond, it's essential to consider strategies like portfolio diversification, staying updated on market trends, and using dollar-cost averaging. Financial giants like BlackRock now suggest that allocating about 2% of a portfolio to Bitcoin can help balance risk while capitalizing on its growth potential. This endorsement signals a shift. Bitcoin is no longer seen as just a speculative asset, but as a legitimate part of mainstream portfolio strategies for the future. Keeping an eye on market trends is equally important. While the simple buy and hodl approach has historically yielded strong returns, more active investors may want to focus on corporate adoption in 2025. Companies that integrate Bitcoin into their financial strategies, such as MicroStrategy in 2024, are setting themselves apart. Additionally, new ETFs tied to companies holding Bitcoin on their balance sheets are in the pipeline, offering investors a new way to gain exposure to Bitcoin's influence on corporate growth. It's clear that the crypto world is moving toward even greater heights, and the momentum isn't stopping anytime soon. Well, that sums it up, guys. For more videos on crypto, please check out my channel. Don't forget to like and subscribe. Thanks for watching, and I'll catch you in the next video.